More now on Pandora's IPO. We are joined from San Jose, California by Tom Taulli. Tom is the founder of IPOByte.com and also the author of Investing in IPOs. And there's a whole lot of all these listings that we've been talking about. Joining us early from the West Coast, Tom, thanks so much for being with us. First off, this Pandora IPO pricing at double what the range was originally. Is this, again, continuing this bubble talk of these social media companies and internet companies?
Well, I think it's a good question. I don't think it's bubble yet. We've only had a couple companies come to the market so far. Now, if we see a dozen companies, 20 companies come in at multi-billion-dollar valuations with lots of losses, then I think we get worried at that point.
This IPO, though, is it a good deal for who? A good deal for investors in the short term, or what?
I think it's definitely good for investors in the short run and institutions that can get shares at the $16 price. I'm sure it's going to go up in the aftermarket, so it's going to be tougher for those investors in the aftermarket to make some money on the deal, although there will be a lot of volatility. But I do think this is very good news for growth in our economy and for companies looking to raise capital. So I think there's a lot of good news here.
Because what? Because it then opens the door for others to list as well and to follow the same model.
Exactly, and we've had a drought in the IPOs for 10 years, and there's a lot of pent-up demand for IPOs from investors. It means capital is going to go into growth industries, so that's going to help out these types of growth companies.
This IPO, though, or these IPOs, why aren't they feeding, though, into more positive sentiment in the overall markets? Are they seen as this sort of isolated part of what is going on in the equity markets?
Yeah, it's one-off for now, but if we get more of these types of IPOs and more excitement, I think that gets investors into the market, and I think that will lift all boats.
But that's the point, Tom, is that these have not. Yeah. This has not increased the amount of volume that we're seeing overall in the markets. It's not bleeding over. And why is that exactly?
Well, I think it's still early in the process. LinkedIn just happened a month ago, but I think once we see the Facebook IPO, once we see Zynga go public, I think that'll create a lot of excitement for investors, and hopefully that will lift other stocks in NASDAQ, maybe the New York Stock Exchange. So I think it'll take time to build, but so far there's some good signs.
What do you make of the limited float of not only Pandora, but Groupon's doing it as well, and you saw LinkedIn doing that?
Mm-hmm. Yeah, it looks like Zynga will do the same. It comes right out of the playbook of 1999. Don't issue a lot of shares. It's all about low supply, high demand, and an IPO becomes a media event. You see a stock go up a lot in the first day. So it's part of this process of creating more excitement and more exposure for these types of companies and to get investors interested.
Okay. All right, Tom, thank you. Appreciate it. Tom Taulli of IPOByte.com talking about Pandora.